AST SpaceMobile is generating heavy discussion across the investor community as traders largely brush aside a recent Scotiabank analyst downgrade and instead focus on what they see as much bigger catalysts ahead, namely the FCC-approved BlueBird 7 launch and progress on AT&T's direct-to-device or D2D beta service rollout. Scotiabank cut the stock to sector underperform from sector perform, citing years of execution delays and rising competitive pressure from Starlink's rapid expansion. The firm emphasized that AST SpaceMobile still has no retail subscribers and will likely need around 50 operational satellites in orbit to provide true continuous mobile coverage, a milestone the bank believes may not be reached until late 2026 or 2027. The downgrade also highlighted slow expected service adoption in the US and Japan, low ARPU projections, and significant capital expenditure requirements, noting that meaningful free cash flow may not materialize until 2028 to 2029. In a blunt assessment, Scotiabank stated that while the technology is impressive, the company has repeatedly struggled to deliver on timelines. But despite the cautious analyst's tone, retail sentiment remains overwhelmingly bullish. Many investors argue that AST SpaceMobile is on the verge of commercial validation thanks to FCC approval for BlueBird 7, deepening integration with AT&T's D2D beta program, successful technical demonstrations, and a growing strategic importance for space-based mobile connectivity. On social platforms, the conversation has leaned heavily toward the long term asymmetric upside, with bulls framing ASTS as a potentially disruptive global communications backbone rather than a traditional satellite operator. Some also highlight elevated short interest, fueling speculation that execution driven news could ignite a meaningful short squeeze, particularly if launch cadence accelerates. Skeptics counter that timelines, funding requirements, and execution precision still matter, and that institutional analysts are right to temper expectations. But the core narrative hasn't shifted. Analysts are focused on risk and timing. The community is focused on vision and disruption. So, AST Space Mobile remains what it has always been, a high conviction, high volatility moonshot where every milestone meaningfully shifts the probability curve of what the company might become.
Okay, so the underlying trend is strongly bullish for ASTS. Okay, and the explanation seems to be suggesting that this contraction that has, I think, it started to play out today. Is it? Yeah, today started to play out today. Yeah, today the 7th of January. It seems to be suggesting that it might continue to do so up to the 26th. And notice something. This is it. This is the extrapolation of its 40-day moving average. We've been observing that when extrapolations, or rather when stocks contract towards their 40-day moving averages or 40 period moving averages, it tends to provide a buy the dip opportunity, provide that fundamentals are right. So this is what seems to be happening here, and you can see here after yeah, you can see here approaching the 40 day moving average, it picks up a bounce based on this extrapolation. So we'll see how all of that will pan out. So as things stand right now, let's see what we have. We have projections of 97.54, 111.35, 119.87. We equally have a market grid on here. You probably can see this. You can see it's all indicated here. The market grid gives us a range of possible prices. So as things stand right now, we have these range of possible prices. It has between the top of the grid is 108.77. Below that, we have at the bottom we have 86.21. The stock is currently at 90.43. This is where it is right now, down at the bottom. So the buy the dip opportunity is improving. The window is opening up. So As it approaches 86.21, it improves even further. We can see here that these prices approaching. Remember, I indicated that when we've observed that when stocks approach their 40 period moving averages, a buy the dip opportunity, improves. They tend to bounce from there. Okay, you can see here we have the lows of around 75. I know 75 is a discount to 86, but as it approaches such levels, there's the opportunity improves. But at the same time as well, as it prints low prices into or through its market grid, the chance of even lower prices printing is there. That is also what seems to be what seems to have you know um, influenced this extrapolation. We have as low as 72.37 printing as a possible bounce, as a possible price where it may pick up a bounce. So what we could do is before we check probabilities, let's have a look at its 4-hour chart to see what's going on there. It gives us a window of what traders are doing. Yesterday, it printed an intraday high of 97.96. Okay, this is the 4-hour chart. Lower prices as well. Expect to keep printing, and the same as well. The same a bounce below its 40 period moving average is expected as well if it continues to decay. Here, the market grid is saying, let's see what we have. 95 between 95.78 and 87.14. Okay, so if it continues to print lower prices, there's a chance that it may continue to even print lower prices. And the sort of levels we have here is possible. Here we have 78.73 as the support where it might pick up a bounce. Okay, projections are currently saying 83.23. It's okay. That's a discount to current levels. Okay, so let's see what we have. Let's apply the market grid. It might give us the price pressure momentum indicator. It gives us the angle of attack of the various moving averages here. Yeah, the stock is down, so selling pressure has kicked in. Let's see, the stock is dropping at a pace of around $7.79 every 4 hours. So let's see now. Yeah, they've been selling, surely, no doubt about that. And the selling pressure has decreased somewhat. Yeah, it has decreased, and the pace has increased. Yeah, the pace at which they have been selling has increased. Yeah. Okay, so let's see now. The probability of it retesting 97.67 is statistically less than 50%. Yeah, less than 50%. Let's see what we have on its daily chart. But in any case, momentum is the extrapolations. The algo seems to be suggesting that momentum may continue to weaken towards Monday, the 12th of January. And then after that, it might pick up as well. So there's a chance that let's see. Yeah, it has dropped. It has. You can see here it has dropped below its 10 period moving average. That is what we have here as well. It has dropped below that moving average, but it's expected that maybe by Monday, by the close of Monday the 12th trading session, it might rise above that moving average. Let's see how it goes. Let's see. On the daily chart, let's see. Momentum is expected to let's see, weaken. Yeah, or pick up as well. Pick up from tomorrow, but not expected to hold it. Yeah, so it's expected to remain depressed. Okay, so here I don't we have the stock is it trading? Okay, for some reason we're having misalignment here. That's on the algos. It seems to be suggesting that it is below its 10-day moving average, but that is not exactly what's going on right now. So this This algo is not exactly giving us a reliable picture as things stand right now. The probability of it retesting 97.96 equally statistically less than 50%. Not very fantastic. Yeah, so yeah, deep buying opportunity might be what might be something that might the people may be considering as things stand right now. Fundamentally, it's nothing is wrong with ASTS. You know, it's just pretty much new in the space, still launching its rockets, and investors and traders are very much aware of that. They're not the downgrade is not a problem for them, but indeed, profit taking is probably what's going on right now, and a deep buying opportunity might open up. It seems to be open up. It seems to be opening up if it continues to print lower prices. Yeah, that would, especially towards its 40-day moving average or indeed 40 period moving average, that opportunity will improve even further. So, see what you make of ASTS, and thank you very much for watching this video.